Convertible bonds. We are going into a deep introduction about why we have convertible bonds, what convertible bond really is, the advantages of convertible bonds to the investor, to the issuer, that is the organization that is using it. We are going to examine the core uniqueness of convertible bonds, why the investors and the company alike use it and love it. And if everything we've said and done after now, it is going to be all about introducing ourselves to the convertible bond. Next, after this video, we are going to go much into the details of convertible bonds. But first of all, let's go into deep details of what convertible bond really is. So convertible bonds basically is a financial instrument. Convertible bond is a financial instrument, that is a debt instrument through which an organization can have fund for their business productivity. Having established that, convertible bonds are for businesses and also investment purposes. So both the issuer and the investors are the two sides of the game. Now, what are the advantages of issuing convertible bond? Convertible bonds, and that is why we call it an hybrid. Convertible bond actually has its uniqueness because it combines the option of interest to the person that bought into it, which we call the investor, and also the investor too will still enjoy the option of equity, that is buying the company's share with the upside effects of capital appreciation. Ordinarily, organizations looking for money, that is fund and capital, to finance their businesses, and the shareholders, or the investors rather, the investors may not for so many reasons want to stake into the share of the organization and prefers to have his money as an investor, like a fixed interest fund, and that is an option already for any investor in convertible bond. But much more is, as the money continues to yield, also at a later date they can decide to take and maximize the opportunity of increase in market share price of that organization that they've lended the money, in which we call convertible bond, and now converts that fund, that investment that is yielding interest ordinarily in the organization, to an equity stake in it. And peradventure, for any reason they now decided not to, they are going to have their money redeemed at a later date to them. So it's a very good option to the investors, and also it gives the advantage to the organization that's looking for money to get it, because they have options to give to the people that can fund and finance them. So basically, inherently in convertible bond is that is flexible. It's flexible. The investor can decide when and how they want their investment options to be transacted. I hope we understand that. They can decide to continue with their interest and receive their interest payments, and they can choose the latter option of having their money with them, having their shares converted. Strategic advantage for market volatility. If market is very volatile, the convertible bond holder takes advantage of the interest and not convert. And for any reason, if the market is favorable, they can decide to go for the option of converting to equity. So it's a powerful tool to company seeking capital, and also issuing convertible bonds for businesses can attract investors who might ordinarily be hesitating to invest in their equity, but now they have the option. So it's a very versatile instrument because it combines the virtue of fixed income stability and also the upside potential for equity shareholders. From G. James Associates, next we are going to go into deep talk about convertible bonds. My name is Benga Olatunji FCA. For those that are just joining us, click like and subscribe to this channel and click the bell all for notifications so that next time you will not miss out on the upload that we newly upload. You receive notification. Recapping what we've learned, convertible bonds are hybrid financial instruments because they combine the fixed income stability nature together with that of equity, and they give the advantage to the investors to subscribe and weigh their options, and also gives more opportunities to the organizations seeking funding. And for investors that have their eye on capital appreciation, they can, of course, in the later dates, redeem and convert their stake into equity. And for those that are risk averse, they can enjoy their fixed interests from their fund that they've given to the organization.